being the 20th year of the bank, and we've had a good year. So we decided to do a stock split to enable more retail participation in Axis Bank shares.
Any other rationale behind the stock split?
No real rationale, except, as I said, it's been a good year. It's the 20th anniversary of the bank, and we do want to see how we can have more retail participation in a stock like us.
As far as infrastructure lending is concerned, especially on that front, Axis Bank is pretty strong. As far as the corporate demand in the infrastructure segment is concerned, are you seeing demand coming in?
Not at the moment, as we know, projects have been stuck, and in an uncertain environment, there haven't been any new project announcements for a very long time. So no, we haven't seen a demand pickup, neither on infrastructure nor even in the broader corporate loan market so far. The expectation is that once the uncertainty of the elections is behind us, then maybe risk appetite will come back and people will start to invest, and that's when we would expect to see any pickup in demand on the corporate side.
On asset quality, could you take us through what's your expectation going forward? Do you think are things kind of bottoming out as far as the NPA stress is concerned?
So I think the economic cycle should turn from here, and as far as the economic cycle is concerned, we think the worst should be behind us. But NPAs come with a bit of a lag, so we would expect broadly that the credit costs for next year should remain within the numbers that we saw in the last year.
And what was your margin in Q3?
3.89%. Last quarter? Last quarter. Sorry, Q3. Q3 was, I think, 3.8%.
Improvement of 10 basis points.
Yeah.
So what's led to this improvement, and going forward, are you expecting this kind of a level as far as margins are concerned, more towards the 4% mark?
Well, a couple of things. One, of course, is the fact that our low-cost deposits have grown well. So, you have seen 200 basis points of current and savings deposits increase quarter over last quarter in FY 2013. So that's one reason. The fact that we raised FCNR deposits also have helped to a certain extent in improving the margins.
And also in terms of the restructuring pipeline going forward, is there any number that you can give us, and any kind of...
How many have you restructured this quarter? So if you can repeat it again.
The total amount of restructured loans was 1,115 crores, and if you look at assets which include investments, it is 1,356 crores. Difficult to put a number to how much will be in the pipeline next year, but this was the figure for the last.
But I think our guidance is that this year we had guided that gross NPA addition plus restructured will probably be around the 6,000 kind of number. And as I said, credit costs next year should be in the same ballpark of about 70 basis points. On a larger loan book, we would expect that gross NPA addition plus restructured could be somewhere around 6,500.
Are there other concerns flattening out as far as asset quality is concerned? Do you see the NPA level reaching down?
That's what I said. As a ratio, yes, we think that the next year should be stable over this year. So we don't expect things to get worse. But as the economy gets better, the improvement in asset quality will come with a lag, so we would expect that we'll begin to see improvement probably only a year down the line, but clearly we shouldn't see a worsening in the coming year.
What kind of loan book are you targeting for next year, and also in deposits?
So traditionally we said that we would like to grow a little ahead of the market, so maybe about 3-4%, but I'm sure you hear that from every bank. So that's our ambition as well, and hopefully we will continue to deliver to that.
As far as the outlook on interest rates is concerned, what's your sense for the next 2-3 quarters? Do you see interest rates around the same level, or do you see?
That's a question you should ask RBI. But I think if inflation rates begin to come off and we see a budget which is fiscally prudent and handles some of the bottlenecks on the supply side, and the monsoon comes out okay, and the El Nino fear doesn't really pan out, then I would expect that maybe there will be headroom for rate easing, but The timing, I guess, is a question you should ask RBI.
And but with the yesterday's forecast of low monsoon and
Yeah.
also the looming of El Nino effect, you believe that will lead to a higher inflation, especially for next few months at least?
That's what I said. So, it is in the circumstance of a fiscally prudent budget, monsoon being broadly okay, and therefore inflation rates coming off, that we can expect rates to ease. El Nino, based on whatever data I have from our economists, may have some correlation, but it is not a very good predictor of what happens to monsoons in India. So I think you cannot predict the monsoons just based on what we're seeing right now.
Monsoon pan out, what kind of effect do you see?
If we do end up with a poor monsoon, then maybe we will see food inflation. But those are all speculations at this point of time. I don't think one can comment, too early to comment on that.
Ma'am, there's been a decline in the cost of funds. What is your annual guidance?
Somnath just mentioned
Costs,
decline in cost of funds.
Well, the cost of funds is largely on account of our low-cost deposit increase over the year.
Plus
Current
the
and savings
FCNR.
and the FCNR deposits that we raised.
What was your cost to income?
Cost-income ratio was around 40%.
Was
40%.
Versus about 41.5.
Yes.
Ma'am, what's the sense on the retail book? Because off late, as far as the numbers are concerned, the retail book is growing much faster than the corporate book. Going forward, do you see trust going to the retail book?
So, we closed last year with about 32% of our loan book coming from retail assets. Part of that growth in retail for us was because we had not fully leveraged our retail liability customer base, and we were leveraging that to build that book. That would continue out into the future as well. But partly also you saw this shift happening because the corporate demand was slow. Now, if corporate demand picks up, then while we will still see the growth on retail, the shift in the book may become much slower.
trading gains?
Trading gains?
Yes, there have been trading gains, the normal on our debt and equity books. The trading profit was 217 crores. 217.
Okay.
Thank you.
Thank you so much.
That's the Axis Bank top management addressing a press conference on the quarter that has gone by. Axis Bank, of course, meeting street expectations with the results that it had announced earlier today. Right, so as far as the Axis Bank numbers go, like I was pointing out, the numbers were in line with estimates. With